Hi, I'm Matt Wilkinson, Associate Portfolio Manager at Morningstar Investment Management. Welcome to the Morningstar Market Minute, a video series where we explore markets, the economy, and other investment trends and how they affect our portfolios. We'll kick off by discussing key market events that are catching our attention this week. Firstly, the Australian equity market has hit all-time highs on the back of technology, energy, and financial stocks. Energy and financials are both up over 20% since the April 7 market lows. However, the tech sector is up an eye-watering 44%, led by names like Technology One and Life360, both of which upgraded earnings guidance recently. It's been quite the V-shaped recovery for the local market, which is now up 17% since that sell-off and is showing little sign of pricing in tariff risks or any other risks for that matter. While the economic environment is currently benign, given interest rates are falling and the GDP growth is steady, for us it's a time to consider valuations and what's priced in. Across our multi-manager portfolios, we've pared back our overweight exposure to Australian equities to account for this risk in favour of value across other markets. The US dollar weakness has caught our eye. The US dollar index, which measures the value of the US dollar against a basket of other currencies, is heading towards the lowest level since March 2022. There's some market talk that the US dollar will lose its reserve currency status and that this is driving most of its weakness, but we think that's overstated. From one of our managers, Capital Group, their currency analyst, Jens Stondergaard, is also on our side. He says that compared to other countries' economic growth and real interest rate differences, plus the relationship of the US dollar to term premium of US treasuries, and finally just how orderly the US dollar has traded in recent months, all indicate that there's no change to the US dollar's reserve currency status. And finally, US CPI was out on Wednesday night, and the good news is that the trend is still down. Core CPI month on month was lower than forecast. It came in at 0.1% versus expectation of 0.3%. Given the implications of tariff, this is a key data point to watch, as there's broad expectations that corporates will pass through much of the additional costs to the consumer. Clearly, there's a fair bit to play out in this front. Well, that's it for this week. Thanks for watching, and we'll be back next Friday for another Market Minute.
Any advice in this video is general advice prepared by Morningstar without reference to your objectives, financial situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.